This is Capital Ideas TV. Coming up, the CEO of Cronos Group, building a global cannabis player, the head of INDIVA, a company with a long history in the cannabis sector, and Bruce Campbell of StoneCastle Investment Management with 3 cannabis investment ideas. Hello and welcome to Capital Ideas TV. I'm Mark Bunting. There's a new contender for the crown of the global cannabis market, and it comes from down under. Australia made headlines with its move to legalize overseas exports of medical marijuana in January. In response, a long lineup of companies have shown interest in acquiring export and cultivation licenses, including Canada's Cronos Group. It's hoping the country can be its key to Asian markets and some sizable revenues. Here's a forecast for the medical marijuana industry in Asia and countries outside of Europe and North America. It comes courtesy of research firm Vision Gain. That market could be worth more than $3.5 billion a decade from now, with annual growth rates in excess of 15% during that stretch. Meanwhile, Grandview Research estimates the global market for medical marijuana will be worth more than $55 billion by 2025. Australia could serve as a key export hub to that global market. Cronos Group recently formed a joint venture in Australia that aims to cultivate and export medical cannabis. It plans to build a 20,000 square foot indoor growing facility that would produce 2,000 kilograms of marijuana. It sits on a 120 acre property full of expansion potential. They shouldn't have too much trouble finding buyers for their product based on Australians' predilection for pot. Australians have one of the highest marijuana usage rates in the world, despite the fact the drug is still illegal in the country. A survey by the University of Melbourne found that 13% of Australians over the age of 14 have used cannabis. The researchers estimate that rate would rise to nearly 20% if marijuana were legalized. The move into Australia is just the latest in Cronos Group's global expansion. The company has also struck deals in Germany and Israel. Here's CEO Michael Gorenstein on the potential he sees in Australia and abroad and what it means for his company's bottom line in the years ahead. Michael, Cronos Group is in Canada, Germany, Israel. You've struck a joint venture in Australia. So can you give us the overarching strategy here with Cronos and what you're planning to do and break down what you eventually think will be the geographic footprint?
Sure. So overall, we look at it as a virtuous cycle. And today what people focus on a lot is capacity. But we think when you look at other industries, you don't look at ABI or Diageo or Novartis and say, wow, look at how much capacity they have. Capacity today is necessary to really fuel the other areas of the cycle. So for us, capacity allows us to set up distribution, allows us to develop intellectual property, and build iconic brands. So for us, when we look at the world, we have an opportunity now with the US restrictions, with all these countries coming on sort of one by one to build and get a presence all over the world. So for us, strategically, putting ourselves in locations that we think will have influence in different regions is a huge part of the strategy. And over time, I expect to have a presence in just about all parts of the world. I don't believe we'll be in Antarctica, but other than that, 6 continents and spreading and as we see advantages and opportunities. And
it's been said that you're probably the most internationally diverse of the Canadian licensed producers. So in Australia, let's focus there.
So we have a cultivation license to grow in Australia, and we have a license for research in Australia, and we recently applied for the import license as well. So I think that generally is a much lower burden to get. But yeah, the idea is to cultivate in that area of the world, build a presence, and in the interim be able to export cannabis from other parts of the world. Long term, we create a hub where in all these different locations we're able to produce cannabis, export, import, manage supply, also create diversity. You see this in other industries as well. There are certain desires to have products created and produced in different parts of the world, and I think that's something that will increasingly become important.
And Australia has approved export of cannabis from their country to other parts of the world, primarily Asia, Australasia?
So the exports aren't specific to any country. Just like any other program, the real stipulation is, does the importing country have a federally legal program, and are you able to receive a permit from the government?
And Australia, for whatever reason, is behind Canada in terms of medical patients. So what sort of growth potential do you see there? And then beyond that, what about the rest, in Asia as well?
We expect growth to start accelerating over the next 6 months to a year. Australia is not as large as Canada, so I think it'll be somewhere maybe 80% the size of the Canadian market medically. I would say you can lump in New Zealand, but we think Southeast Asia is also going to start. You'll start seeing more coming online. South Korea, Singapore, Thailand. So we do see quite a bit of growth potential there.
Well, let's talk some numbers specifically, Michael. It looks, based on your projections in your investor presentation, that you're really looking to ramp revenue and profit in 2018. So, okay, what does that look like?
Sure. So a lot of what we were doing 2017, when we took over, we were retrofitting, we were building facilities. So we do have 3 buildings that are now online at Peace Naturals, and in addition, a greenhouse which is just coming online. At OGBC, we have another facility. So you haven't been able to see all of those buildings operational in any of our financials to date. So that's a function of capacity. There's certainly excess demand, so that's part of the ramp. In addition, we are completing construction on a 286,000 square foot facility at Peace Naturals, and that will of course contribute to the ramp up. And then our international platforms, Israel, Australia, and more expansions to come.
And you've got about, let's say, $40 million in cash. Are you looking to invest in the business, or do you want to do some acquisitions?
Right now, when we look at the field, it's always an analysis for accretion and dilution when you think of building versus buying. So, if I look at acquisition targets, if there is not a already developed, ready to go capacity center that would be a similar cost to me building it myself, the way that we would want to do it, our efficiency level, great technology, we're more likely to build. And in addition to the $40 million plus in cash, we also still have another $33 million we can draw on our credit line from Romspin. So we do certainly have a fair amount of funded capacity for expansion.
Now, you've said in the past that you think ultimately the Canadian market will feature about 6 to 8 large licensed producers. So why do you say that, and how important is quality, number one, and the quality of the brands that the companies have?
Sure, I think quality is extremely important. There will be segments, so when you look at stratifying brands, I think you'll have a value area, you'll have a mainstream area, and a premium. But if you're going to compete in mainstream or premium, you're going to need quality. People talk about costs a lot, but as the market matures, it's not just is there supply available, is it good quality? This isn't as much of a commodity as people make it think, or may think. If you look at alcohol, right? When's the last time you went to dinner and ordered a glass of moonshine? You're picking based off flavor, based off taste, and cannabis is more sophisticated and more complex. So then there's the actual psychoactive effects, which differ depending on the cannabinoid content and terpenes you have. So I think quality is going to be the most important factor. I think it's often overlooked. Why do I think there'll be 6 to 8? Most markets, that's how things tend to develop in terms of large-scale players. It doesn't mean that I think everyone goes bankrupt at 6 to 8. I think that you'll probably see consolidation to create those final 6 to 8. But it's also important there will be crafts producers. I think that the general market demand and what consumers want, especially in cannabis, is to have some resonance with the brands they're dealing with, understand the culture, and craft is a huge part of that.
Lastly, we're looking at your stock here. You had an unbelievable run, especially towards the end of 2017. A lot of these stocks have settled back lately, but there's so much talk about the valuation of cannabis companies, and that they're overvalued, and that they're being valued at where they may be trading 4 or 5 years down the road. So what's your view on your valuation and valuations in the sector in general?
Sure. Well, I think there's 2 things. First, every valuation is going to be forward-looking to some extent, right? The idea that it would be all based off of today would negate the whole concept of a multiple, and equity is based off of future profits. So the question is, how far are you willing to do a DCF analysis to pull back and value the stocks today? And you've seen this in tech. You even can look at Amazon. The amount of profit Amazon produces, it's negligible. But it's expectations of the future, and it's a function of growth. The other thing that I think people focus on when they look at Canadian-listed cannabis companies, and I've heard this before, is they say, well, the whole Canadian market will only be $10 billion. How do you justify your valuation? And the reason that I believe that we're still undervalued is you say, well, yes, that does make sense if we were only in Canada. But then you go look at Germany, you look at the rest of the EU, you look at Australia, Asia, who is set up to actually get and capture that market. And that's how we've positioned ourselves, focusing on the much bigger part of the pie, right? That's the rest of the world, continuing to build a strong presence in Canada, but developing disruptive IP and being able to have iconic brands, and ultimately, in call it 3 years, 4 years, moving back to the United States, where I think the largest market will develop.
Cronos Group won our stock picking contest in 2017. We had Warren West out of Winnipeg, a retiree. He chose your company after doing some research in late 2016. Jason Stanley out of Delta, BC, he's an entrepreneur. The same thing, also did his research. So how does that make you feel knowing that of all the cannabis stocks that those guys could have chose, they zeroed in on Cronos Group and you delivered?
Look, that's great. It's like that's one of the most gratifying things about being a public company is that you're sharing your success with others and it's tangible. You know, when we started off, I actually was an investor in cannabis, and part of the reason we took over an active management role is we were not necessarily pleased with the way that a lot of the management teams were treating shareholders, whether it was toxic financing vehicles, self-dealing, over-promoting. And so what we did was a little different, where we invested our own capital. We weren't founders. We took over, and we operated the way that we thought the company should be operated and the way we wanted to be treated. And we haven't been loud, so when people are catching on, it means a lot to us, and it's huge.
So we finance top-tier companies in the medical cannabis industry in exchange for a royalty. So I love the royalty model. I think it works perfectly for this industry at this time. Debt is largely not available in the US, and equity can be massively dilutive. And the reality is every company in California and most states right now is a startup company. So we offer a very attractive, either a complement or an attractive alternative to debt or equity, which really aligns our financial interests with the interests of the people that we invest in. So when they're successful, we're successful, and the more successful they are, the more successful we are.
Legalization of cannabis in Canada is just around the corner, and that's brought a flood of new entrants into the blossoming industry. As with any new market, there are plenty of inexperienced players looking to make a quick buck. London, Ontario's Indiva is nothing of the sort. In fact, its founder, Pete Young, has a rich history of advocating for the right to medical cannabis and bringing the product to those in need. Young helped form a political movement that lobbied for access to medical cannabis in the early 1990s. After that, he learned about cannabis cultivation and genetics as a photographer for High Times magazine. He eventually opened a nonprofit organization that was granted the right to provide medical cannabis to patients in 2001. And since 2013, he's worked to evolve that nonprofit into a large-scale licensed producer. Young serves as INDIVA'S master grower and has a management team full of industry veterans behind him. They believe their in-depth knowledge of cultivating top-notch cannabis and how users consume it will give them an edge on the competition. INDIVA is looking to tap into a cannabis market that could be worth roughly $10 billion in less than a decade. They've got a busy year planned in order to meet that demand. INDIVA expects to receive its full cannabis production license in the second quarter of this year. The company plans to be selling product by the third quarter. That ought to time up nicely with the expansion of its London, Ontario facility, which will have nearly 30,000 square feet of production space. It's due to be finished in the fourth quarter, bringing full capacity online ahead of 2019. Pete Young may be the point man when it comes to production, but CEO Neil Marotta is the one shaking hands and striking deals. His eventual goal is to produce and sell 40 million grams of cannabis. Marotta recently sat down with us to explain how he intends to hit such a lofty target. Neil, INDIVA has been around quite a while, and you're not new to the game, especially through your master grower, Pete Young, a longtime activist in the sector. So what are your competitive advantages? Is that your key differentiator against other companies that are new to the cannabis sector?
Mm-hmm. Yeah, thanks for having me, Mark. It's definitely one of our key advantages. So our master grower, Pete Young, has been involved in the medical marijuana market for a better part of 15 plus years since the inception of the MMAR. And so he's helped hundreds of patients over the years with their medical needs and providing them with medicinal cannabis. So we see this as, in our case, our roots going deep, and this is something that we promote, is really the authenticity behind our brand. Having somebody that's been in the MMAR that's helped patients for a long time, and we joke all the time, it's forgotten more about cannabis than we'll ever learn. So that's, we look at it as a bridge between, let's say, the old regs and the new regs and the new system that's in place now. So that's absolutely a big part of our competitive advantage. The other thing I would say is that we've worked really hard to develop a team of people that have complementary skill sets. So it wasn't enough just for us to find a terrific grower, and that's why we ended up in London, Ontario. That's where Pete was, and that's where the facility is. But we also tried to bring in people with the right finance and legal background, as well as marketing and patient care, and really round out the group, so that we could be competitive in this industry.
Take us through INDIVA'S timeline as far as your first harvest, which I believe is this quarter, and then on to sales and expected revenue and eventually profitability.
Right. So we expect to have our first harvest complete in Q1 of 2018. From there, we'll have to complete 2 batches, have it tested, and we'll invite Health Canada in to inspect our packaging and our software systems, inventory management systems. And subject to that going smoothly in a timely fashion, we would expect our sales license as early as Q2 of 2018.
And then how are you going to go about selling? Online, eventually retail when that's allowed, and how are you going to do it?
Mm-hmm. Well, so initially as a medical producer right now, the laws only allow us to ship directly to patients. So that's how we'll start, is through direct sales. So patients will register with INDIVA once they've got a prescription. We verify that prescription with their physician to make sure it's genuine, and then we can begin shipping product and selling through the mail. Once the law changes in the summer of 2018, which everyone seems to agree this is the very likely time frame for it to happen, then we'll be able to sell, let's say, wholesale through various retail channels, and all of the provinces are developing their own retail channel, and absolutely we do embrace the recreational market as well.
Now, INDIVA'S sitting on a fair amount of cash, more than 30 million or so. So what are your plans in terms of expansion in other jurisdictions in Canada and internationally as well?
Mm-hmm. Yeah, so we would absolutely like to have a second licensed facility outside of our first facility in London. We like London. Our first facility, we retrofit about 10,000 square feet. With the cash, as you pointed out, we're about 34 million of cash pro forma for the financing we just completed. That's more than ample cash to complete the expansion to 40,000 square feet. And then from there, we recognize with such a huge market opportunity, upwards of, some say, 1 billion grams a year, that will need scale. And so we target the kind of 50 to 100 million gram a year is where we'd like to grow to. We think we'll have a nice growth ramp to get there from our small base of, let's call it 2.5 to 3 million grams. So we absolutely want to be able to have the kind of production that gives us market share. And in addition, where we see this market really going is into the derivative products. So it's all well and good, and it's our goal to grow very high quality dry flowers and sell them at a fair price through all channels that are legal. But then the derivative market, the oils and vape pens and other products, this is really where we think the market is going, edibles and beverages and whatnot. So we're aggressively pursuing licensing opportunities inside and outside of Canada, which we think will give us an array of products. It should help us win shelf space and also extend the quality and authenticity behind the dry flowers and behind our brand into those derivative products.
Do you have any sense as to how big a part of your business would be the derivatives, as you call them, oils and edibles, down the road? Would that be 50-50 compared to the dried flower, or it's too early to say?
It's a good question. I think it might be just a little bit too early to say, mainly because we don't know how the regulations will shake out. I think if you look at jurisdictions south of the border, anywhere from, let's say, a third to half of the market would be what you would consider edibles or derivative products. And we think that Canada probably will mirror that eventually, again, subject to the regulations and subject to the distribution channels that get developed.
Now, it's a crowded sector, and going to be even more crowded, as you know. It's very volatile. Investors have a lot of choice. So what's your message to investors with this newly public INDIVA as far as we're a good company to invest in?
Mm-hmm. Right. Well, I think you're right. There are, I think it's 89 licensed producers at last count. That's a fairly big number. Now, by comparison, there's over 1,000 in the state of Washington with about a fifth of the population of Canada. So I don't think we have too many licensed producers per se. I think we're going to see larger licensed producers. I think it's inevitable we see consolidation. But what we're trying to do at INDIVA is really build a brand around authenticity and experience where we can connect with our clients. And we're agnostic as to whether somebody is a patient or a customer. That's really not up to us to decide. That's up to the client to decide why they use cannabis, and as long as there's a legal channel for them to access it, we're happy to provide high quality products through that channel.
Right now you walk inside a truck and you see multiple devices. You see a fleet management device, you see a two-way radio, black box, tablet of some sort, front camera, $6,000 to $10,000 worth of equipment. We're shrinking down to less than $1,000 in one device. The change in the cabin is just dramatic. It's just much, much safer for the truck driver to be able to use one device. Really what we're doing is we're creating a new environment and a new technology that has not been seen to date in the market.
Bruce Campbell and his team at StoneCastle Investment Management have a reputation for being disciplined and results-oriented. Their core principles are all about finding companies with strong earnings and growth potential without taking on undue risk in a chase for returns. The team has found its match in the cannabis sector with the industry in full-blown expansion. There are plenty of companies with promise, but it's all about finding the ones that know how to build a solid business. I recently sat down with Bruce and he shared 3 cannabis stocks he believes fit that bill. Bruce, you were here in mid-November and you recommended Friday night, and the stock took off after that. It's done really well. They've had some good news and some deals lately, so update us on that story.
Yeah, so there's been a few catalysts there. They came out with their quarterly numbers. The numbers were very strong as far as the sales growth that they had and also their gross margin. They're still not quite at the point where they're making cash flow positive numbers, but I suspect that that's probably a quarter away. And then they've also announced a couple of deals as well. So they initially announced a deal where they would be managing the operation beside theirs, which is identical to theirs, but the operator has never actually come in and operated. They were going to operate that to begin with, and now they've actually announced that they're going to be buying that for a fairly attractive price.
And that's in Nevada.
It's next door to them in Nevada.
Okay.
Like literally it's right next door to them. And then they've also announced that they're going to be making an acquisition of another company called Body and Mind, which has an operation in Las Vegas as well. So they're going to be really increasing their footprint. And then they continue to move things forward with their expansion. They're doing that big expansion out by Nellis Air Force Base. And they've raised quite a bit of money through the exercise of the warrant. So they are quite a ways down the path to having the money for that as well.
We'll keep following that one. Another idea you have is LGC Capital, and the thing that stands out here is that they're hitting all the right notes. Global Cannabis Blockchain Platform is what they're working on, among other things. So tell us about this company. They invest in cannabis-related companies?
That's right, yeah. So they're not full owners. They typically do partnerships with different companies. And sort of the first biggest one was they invested over in South Africa to a company called House of Hemp. And effectively it's not the THC side of things, but it's the CBD side of things. They've since done a deal in Australia, and they're also working in Canada as well, in Quebec. So they certainly have a number of different irons in the fire, and it's all international as well. So, I mean, obviously they have the Canadian asset, but they have, Australia and South Africa as well.
So that could give an investor an international flavor to their cannabis holdings.
Yeah, I mean, a lot of the Canadian portfolios right now are strictly Canadian LPs. Some of the LPs have diversified, but this is a real international company. Like their biggest asset would be the South African one.
Your other idea here in the cannabis space is INDIVA, and they're producing high quality medical cannabis. So the question I always like to ask is how do they stand out, because so many companies are doing something similar?
Yeah, I mean, the likeness today is very similar in the industry as far as all these different companies. The one thing that I see really differentiating INDIVA is their grower. So this is a gentleman who has 15 years of experience growing marijuana and also providing medical patients with medical marijuana through the old MMAR program and through Compassion Club. And so he knows strains very well. He also knows service as far as helping the patients. They have a fully financed operation and fully financed expansion, and the valuation is still very attractive. They just recently went public, and it trades at a multiple significantly lower than a lot of the other existing LPs, just because no one knows about them yet.
Do you look at it as a cost per gram produced, or what metric do you look at?
We look at a lot of different metrics. I mean, cost per gram produced is obviously one, because we think that over time commoditization is going to push the business to where growing is going to be very difficult to make money. You know, that's probably 10 years off now, but that's obviously something that we have to watch very closely with any of the LPs we invest in.
Most of the data that's ever been created has been created in the past 2 years. You need a system for analyzing and making sense out of that data, and that's what we do. Where we, I think, really shine is we're a turnkey solution. We have hardware products that we can put in place. We have telemetry that we can put in place. It's all cloud-based, and we do it all for you.
Now, here are a few interesting facts you might not know about those 3 stocks Bruce Campbell recommended. Let's start with Friday Night Inc., which is breaking into the liquor business as well. The company sells Bellissima Prosecco, which means most beautiful in Italian. It's a Prosecco from the Treviso region of Italy and comes in 3 varieties. The product was created in tandem with model and actress Christy Brinkley. It's a niche drink with solid fundamentals behind it. Prosecco sales are growing more than 4 times as fast as champagne sales in the US, according to research by Nielsen. Friday Night's second brand is also backed by star power, in this case Chaz Palminteri, who's appeared in films such as A Bronx Tale, The Usual Suspects, and Analyze This. He's put his name behind BV Vodka, which is crafted in Sicily. It won a gold medal from the Artisan Spirits Awards of San Francisco in 2016, and has generated some buzz thanks to its quality. But don't take it from me, hear it from Chaz himself.
BV is flavored by hundreds of years of tradition and respect. If you like cupcakes, eat a cupcake. If you want the flavor of a great vodka, drink a great vodka.
Campbell's second pick, LGC Capital, is also getting into the beverage business, but staying close to its cannabis roots. The company recently struck a joint venture to develop cannabis-infused drinks, both alcoholic and non-alcoholic. The initial focus is on 4 craft beers flavored with marijuana extracts, but without psychoactive ingredients. It's looking to tap into growing consumer taste around the world. The craft beer market in the Americas was worth roughly $30 billion in 2016. That's more than half of the global market opportunity. But LGC Capital has its eyes set further abroad in Europe and the Middle East. Craft beer there is expected to be a $38 billion business by 2021. Meanwhile, craft beer sales growth in Asia Pacific is clocking in at a compound annual growth rate of 16%. LGC Capital and its partners expect the first batch of cannabis craft beers to hit store shelves in early summer of this year. They've already identified potential distribution partners in several regions, including Europe, Africa, and Australia. Lastly, INDIVA is not your average cannabis company. Instead, it takes a page from marijuana's free-spirited origins. Co-founder and master grower Pete Young has been a longtime advocate for cannabis rights in Canada, as we mentioned earlier. He set up shop in his hometown of London, Ontario. INDIVA operates a 40,000 square foot marijuana production facility in the city. It makes efforts to hire locally, source its materials from the area, and use sustainable vegan growing practices. The company also provides discounts to military veterans and customers in financial need. This compassionate approach has earned both Young and his company some appreciative nods from the cannabis community and has enhanced the brand's image. From the heart of the financial district in downtown Toronto, that's our show for this week. I'm Mark Bunting. Be sure to subscribe to our YouTube channel so you don't miss an episode. And for more great research and great investment ideas through our weekly digest and morning note, subscribe to capitalideasresearch.com. Thanks a lot for watching, and thanks for investing like a pro. We'll see you next time.